Today, we're going to talk about the findings from the recent NACS State of the Industry Summit that took place, ended yesterday. I just came back to the office, so minutes in, let's give a review of what we saw and what we heard and why it matters to you. So at the most recent NACS SOI Summit, they went through the numbers and looked at a variety of things. We'll give you the big picture findings first, and then I'd like to dive into a couple key categories and give you a sense of what was talked about. Of course, much more of this will be available in the June issue of NACS Magazine, in the SOI report that comes out, and in various other things that you'll see on NACS Media, NACS Daily, etc. So let's start out with the big numbers that we saw in the press release. First off, the headline is, for the 22nd straight year, in-store sales set a record. Now, that is reason I'm saying in-store sales is because overall sales fell by $70 billion, which sounds disastrous, but that is all related to fuel. Fuel prices were down about 6.5% last year. So ultimately, the gallons sold was roughly flat. But because fuel prices were down, it reflects that fuel sales were down. And that's really not the story that makes sense in telling. So 22nd year in a row, we had in-store sales set a record. That is certainly great news. We'll talk about the various categories that led to this growth. But overall, it was $335.5 billion in in-store sales. No surprise, the number one factor driving those sales was food service. And food service in our industry, for those that don't know, is qualified as several different subcategories put together. And essentially, the reason they're done that way is these are things that you'd see in a restaurant. So that means dispensed, that means things grab and go that's prepared. So essentially what food service means is it means 5 different categories. It is prepared food, and that is by far the biggest category of food service. It's about 69% of overall sales. It also includes commissary items, and those are items that are delivered every morning or a few times a week in that grab-and-go case, but they are not packaged. They are made and commissary and brought to the store. The 3 other categories within food service are hot beverages, hot dispensed, which is largely coffee, but also, of course, tea, hot chocolate, anything else that's hot, that's dispensed. Second is cold dispensed, and that is sodas, that is anything else that comes out of those, out of the dispensed beverage, the fountain beverage. And third is what our industry is known for, which is frozen dispensed, and that is, you pick the brand name, you know what that is. It's I think one of the most iconic parts of our industry in terms of what we offer, the frozen dispense. So those are the 5 categories, and they contributed 28.7% of in-store sales dollars. So to put that in perspective, and so we're looking at about $3 in $10 inside the store, almost $3 in $10 inside the store comes from food service, and that is remarkable growth. 20 years ago, food service sales within our industry were 11.9%, so roughly 1 in 10. In the last 20 years, food service as a percent of in-store sales, which is different than that doesn't include inflation or something like that. This is how much growth you've really seen inside the store. Food service has gone in 20 years from 1 in $10 roughly to 3 in $10. That is absolutely remarkable growth, and it doesn't show any signs of slowing down. Also, within food service, there's a real significant difference between top decile and bottom decile. And talk about food service for a few minutes further, and then we can dive into some other categories. But at the SOI Summit, there were different ways that we look at data. We look at data on average. We also look at data by decile. And decile means where do you fit in profits? And decile is 1/10. So the difference between the top decile and the bottom decile in terms of food service sales is remarkable. Bottom decile, and this includes fuel into the sales equation. Bottom decile, about 3% of overall sales was food service. Top decile was about 33%, so about an 11-fold difference between bottom decile and top decile in terms of food service sales. Not 11%, 11 times. And that just shows the power of food service with what it does and how it can differentiate a convenience store from another convenience store or anybody else that sells convenience items. Because one of the things that we've seen over the last few years is everyone is convenient. So you go in any store, they're selling snacks, they're selling drinks. They're not doing food service because that's another level. We are. So it is good for margin. If you have a unique product, they're coming to your store, not the competition. And it brings repeat customers. So the big story when you look at SOI numbers this year is the continuing growth of food service. Now, obviously, there's some challenges. One of the things that we looked at is we looked at consumer data and how do people think about food service? And we're still not where we want to be. There's some numbers that were shared that only roughly, I think it was 18% of consumers think that convenience store food service is the quality and consistency of QSRs. That is certainly something that we can change by talking more about food, talking about all those great places that have food. The other thing that feeds or relates to that is there was a stat that we talked about at the SOI Summit from Convenience Voices, which is a NACS program where they interview consumers at the moment of truth, which is there at the convenience store. What you buy, why you buy it, all these other questions related to what you think about convenience stores. And what we learned out of these is roughly 1 in 3 C-store customers will go to a QSR within 30 minutes of going to the convenience store. And that is about $130 billion lost in food service sales if those food service sales had been captured at the convenience store instead of going to the QSR. So that's a big opportunity. And when consumers were probed, when they were asked, what are the various reasons that you didn't buy food service? Why did you go? Why are you going to a QSR? Number one thing is they didn't have what they wanted. Number two, so that means like the type of product. I wanted pizza, they didn't have pizza, something like that. The second was the level of quality. They didn't see the level of quality there. And third was out of stocks. You had it, but they didn't have it at that time. So that's a big watch out in terms of food service, is we still need to do a good job in telling the food service story and making sure when somebody comes in for food service, they find what they're looking for and they leave with it, because it is not convenient to do that second trip and go to a QSR, yet that's what consumers are doing. Final thing about food service is food safety. And you just Google it every day. There's food safety recalls because of something. Today, it's something. One of the headlines was related to celery. But when we talk food safety, this is a big deal for anybody who sells food. And right before the next SOI forum, we had the food safety forum, and there were something like 70 to 80 leaders within the industry that spent the afternoon and really dove into what's going on with food safety and how can we build a food safety culture for our industry so that we are as certain as we can be that the food that we sell is not only delicious, but it is safe. And this is something that you can expect to see more from NACS. Was the third Food Safety Forum, and we will likely have it as a standalone event next year. So stay tuned. There's more on food safety. This is an issue that's very, very important to the industry. So that's food safety and food service. What were some of the other big numbers behind categories that we saw within convenience stores? A second issue, a second message that we heard a lot about is you need to diversify revenue streams, or think about diversifying revenue streams, because you look at the big categories that our industry is known for. You have fuel, and while fuel gallons were flat, they have been on a downward trajectory over the last 8 years. And as fuel efficiency improves, in particular, a little less so with EVs because it's up in the air how those sales are going, but certainly EVs are a part of our future. But there will be a downward trend with fuels. And while fuels gets people to the store and gets people inside the store, it's also a category that is evolving. So that's one watch out. Second is related to tobacco, which continues to see declines. At the same time, OTP, other tobacco products, is seeing increases, and that's oral tobacco, that's all these other vape, all these other categories within that. So that category is very much in flux. Third, you have snacks. And snacks, there's been some stories in the media about how packaged snack sales have been down across certain channels. And one of the reasons for that is because of price inflation. I'll talk about that a little bit more down the road today. But another core category that we have seen a decrease in sales in 2024 compared to 2023 was was lottery. Lottery sales, lottery commissions were down 7.7%. And there could be a variety of factors involved in there, but most likely it is the prevalence of online gambling, that whether it's for sports or gambling or whatever, you don't necessarily have to leave your house and go buy a lottery ticket and perhaps even wait a couple days. It is much closer to immediate gratification with sports betting, where you can do prop bets. You can bet on how many points this guy's going to score in the next 10 minutes. It is immediate gratification. It is entertainment, and it is something that I think we will need to monitor to see how we may need to adjust things down the road. So when you look at diversifying revenue streams, two NACS magazine stories come to mind that are in recent NACS magazine. One is we had something in the April issue looking at how consumers think about convenience stores and the products they buy. And what we saw in that April 2025 NACS magazine is that consumers ages 18 to 34, and we had a podcast about this a couple weeks ago, they look at convenience stores much differently than any other demographic. They are more likely to look at convenience stores for things like phone chargers and other phone-related accessories. They're more likely to look for groceries, and it's not those traditional items. So there's an opportunity there. The other thing, and you'll see this in the May issue of the NACS magazine, we had a recap of the Convenience Summit Asia, the NACS Convenience Summit Asia, which was in Tokyo. And we looked at a variety of things that we thought were possible things that could be brought back to the U.S. And one of them was the financial centers that you see at convenience stores in Tokyo. They're really, really impressive. And it is not just ATMs. You can order baseball tickets. You can do print copying. You can do printing. You can do faxing. And yes, that's still a thing, particularly when it relates to sensitive financial documents and things like that. So there are opportunities. Look at some of these things, how they might be appropriate for you, what vendors are out there, but what are some ways to do a little bit of diversification in terms of what your stores may offer as some of the traditional items continue to face challenges. So, speaking of challenges, another really big topic that was discussed during the State of the Industry Summit was GLP-1, the diet, the various diet drugs that people are using right now. In roughly 1 in 6 families has somebody, a member of that family, who has at one point or another tried one of these weight loss drugs or is using one of these weight loss drugs. It is an astonishing number. And why it's important to talk about families is because if one member is using these drugs, it affects how meals and how eating takes place across the entire family. And that can be a threat. That can be an opportunity. And that's one of the things that we talked about. On its surface, when I had mentioned just a few minutes ago, talking about packaged goods sales, had not as robust increases in many cases as some other categories. One of the main reasons for that has been really significant inflation in the last couple of years. 40-some% increase over 3 years with salty snacks, with candies. So that's put pressure on consumers to say, hey, is this what I really want today? But with GLP-1 medication, one of the big things that we learned was people are not necessarily eating less, they're eating differently. And one example, I think, that best positions our industry is oftentimes when people are on these weight loss drugs, they eat one meal a day. And these weight loss drugs tamp down appetite. So you kind of key in on one meal and you eat that. The rest of the day is snacking. And as one of the speakers said from the stage, who's better at selling snacks than us? So it could be a potential opportunity for looking at if there are areas where you notice or you're aware that there are a lot of people trying these drugs, there could be an opportunity to sell snacks. Now, with snacking, what we learned is that when people are looking to pick up snacks, they tend to want some sort of functionality to those snacks. Is it low in sugar? Is it high in protein? What does it do, and how does it fit into what the overall goal is of curbing weight, or curbing appetite, and changing diet in terms of the snacks that you buy? So there could be some real opportunities here, and that's worth exploring. And of course, we'll have much more on that in all our coverage of the NACS State of the Industry Summit. So I would like to finish by talking about probably the one word that you heard talked about more than anything else this week. And that word was uncertainty. This was a week where we saw the markets, the stock markets, I think if they only jumped or fell by 1,000 points a day, that was like a kind of a normal, but normal considering. But such staggering swings in the market related to the tariffs, and are they on? Are they off? What does this mean? And we really heard up-to-date information on how long will uncertainty be in the market? What will be the impact of tariffs? What will it do to everything? And in short, uncertainty will continue this year because we essentially have an administration that feels that uncertainty can be a negotiating ploy. That if you have somebody just a little bit back on their heels, it might present a better opportunity to strike deals and things like that. So the consensus is uncertainty is not going away. Number two, tariffs are not going away. Now, there's been a lot of talk or a lot of news reports that this tariff's going up, this tariff's going down, this tariff's been implemented, this tariff's been modified. And the reason that speakers said that they feel tariffs are here to stay is once they're implemented, once they're enacted, they become very difficult to pull back because it has to be done on a country by country basis, and it takes some work. So there'll probably be tariffs for a while now, possibly through this administration, perhaps going into the next administration. So tariffs and uncertainty will continue. How will that affect convenience stores? One thing is it could definitely affect supply chain. And the supply chain is prepared. It is prepared for normal consumer behavior. However, as we saw with the pandemic 5 years ago, normal behavior can change once there's pressure put by. The one example that somebody used is all of a sudden every day everybody wanted to buy a 4-pack of toilet paper, and there goes the supply chain. It's not set up that way, and so it crashed. And there were outages. Then you oversupply. Then there's inflation, and all these effects layer on themselves. So there could be some supply chain issues depending upon how items are affected by tariffs, whether there are other sources to find more affordable items because of the tariffs. There also that also can affect a lot of things related to investments. One of the concerns that was raised is in times of uncertainty, sometimes capital investments are delayed because you don't know if the money you expect to use will be changed. The investment will change because of the market. So we could see some change in capital investments this year. One other thing that somebody pointed out about uncertainty is the capital markets hate uncertainty. So, or capital hates uncertainty. Money hates uncertainty. So what it does is it usually flies towards places of certainty, and that could accelerate M&A activity this year. In fact, one speaker said that M&A will continue and will probably be stronger this year than it was last year, because there are a lot of companies within our industry that are looking to grow and are looking for opportunities. And you also have a lot of companies that are not in our industry that see our industry as a safe haven because, you start at the top of the show, 22 straight years of in-store sales. And only about 141 store drop from last year to this year in terms of store count, 100 out of the 152,000. So really essentially flat store count, which is amazing considering everything else you see in brick and mortar world. So that's a quick preview. First day back in the office, coming back from the NACS State of the Industry Summit. There are certainly some watch-outs, and I think the biggest thing that I'd like to leave with is pay attention to the customer, because when you look at uncertainty right now, the customer is feeling it. And we just saw surveys this morning that said that consumers are more concerned about jobs than they have been in a number of years. Now, it could be their job, it could be another family member's job, but that's what uncertainty does. So when people are uncertain, they're much less likely to spend money, or they're going to look to spend money that has value. So there's a real opportunity to look at your operations through your customers' eyes. Because while inflation has cooled, the last 2 years plus this year is pretty significant. So we've seen this big run up in prices, and inflation is less, but it's still led to a higher price of items. So find value. develop that customer experience and focus on your people, because there's a lot of reasons for people to not spend money now, to not leave their houses now, to be concerned about things and hold back. And what you want to do is you want to give that great customer experience that starts with people, that continues with value, and just begets repeat behavior. So if there's one takeaway in a time of uncertainty, focus on the customer, because that customer is just as uncertain about things as anyone. So, as I said, much more to come. That's a snapshot. We have the press release about the SOI numbers and the NACS daily story. Just go on convenience.org. The June issue of NACS magazine will have well over 100 pages, most of it covering the NACS SOI Summit. And we'll also have the NACS SOI Summit report that will be out around that time. So there's a lot more coming, where I'm going to hang up here and I'm going to start writing and get all this information out. It was a very, very good summit in terms of takeaways, and we look forward to sharing them through all those means and through future episodes of Convenience Matters. So thanks for listening, and we'll talk more next week.
Convenience Matters is brought to you by NACS and produced in partnership with Human Factor. For more information, visit convenience.org.